China's third plenum provides little support to metals. China had their third plenum. Last week's key Communist Party meeting failed to lay out more policies to prop up demand for metals, and we expect copper and other industrial metals to decline further in the near term to reflect softer demand outlook in China.
Welcome to the Morning Markets and Metals with Vince Lanci, where each day he brings you the precious metals and financial news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci. Today's market rundown, I think, could be very important for the next couple months or so with regards to the political process as well as for copper and silver. We're going to be exploring what we believe is the first day of the Democrats' rollout of their attack plan on Donald Trump economically. This is not politics. This is about economics, but this is what's going to happen in the markets, hopefully, or potentially. We also look at China's third plenum and how it did or did not help copper and silver. And based on yesterday's activity, it did not help it. All right, let's start with the markets, and we'll leave some charts up there for you first. That's a silver daily chart. The dollar is up 14 at 104.42. The 10-year yield is 4.23, down 1 to 2 basis points. S&P 500 is 55.70, up 7.5 to 8 handles. The VIX is 14.89, well off the highs, but still elevated relative to recent months. Gold is 24.06, up 10, stable and strong. Not surprisingly, but encouragingly. Silver is 29.05, being dragged up after being sold again last night, being dragged up by gold, I believe. And copper is 4.16, down 3 cents, weak and relatively staying weak. All encouraging from how metals should be acting right now. WTI is 79.20, down 20 cents after a slam the last couple days, keeping things in line, plunge protection team. Natural gas is 220, down a penny. Bitcoin is down another 868 at 66,665. Can't get more satanic than that, I guess. 66,666 would be the best. Ethereum is 35.16, up 76. Platinum and palladium are up pretty strongly. I mean, it's not a big move, but it's interesting. Palladium is up 12 at 918. Platinum is 954, up 12 as well. So that's a uniform PGM purchase, up 1.4 and up 1.3% respectively. Grains are giving back about 1/3 of what they added yesterday. Soybeans 11.23, down a penny. Corn is 3.95, down a penny, and wheat is 5.48, down 6 cents. We'll start with the silver and gold charts quickly. Yesterday, silver had a steep sell-off, but recovered most of it. Today, it retested that area and has recovered most of it, but it's working its way lower. This line is a new line that I drew, and it's based on these 2 days behavior, and then I look back and eyeball these. So we do have a line in the sand there. Silver is being bought at that level. The question is by who and how aggressively. We know it's not a central bank. Could be a sovereign wealth fund. It could be, but I don't think so. I think it's macro discretionary. Gold. Gold is, well, I had a line in here. Remember that? I took it out, right? So here's the big buyer. There's that line I took out. So now we don't have to talk about that anymore. And we have a new line. And this is the whale buying, okay? Many times. Maybe he'll buy again if we go there or not. I don't know. I'm counting on that he will. This could be the new line of another smaller baby whale buying. And that's based on these two areas here, which I kind of ignored before. But then I extrapolated back here, and I guess it kind of makes sense because it's the 2400 strike between 2385 and 2415. The gravity of that strike will keep the market in line. Anyway, if you look at the three behaviors of these markets, gold, bid, but not bought. Silver, sold, but not short. Copper, sold and short. Precious industrial, all perfectly what you would expect if you were looking at this from the China perspective. Okay, let's go to the stories, and I'll touch on more of that in a little bit. Where are we? There we are. All right, so Democratic economic attack plan against Trump revealed. China is selling copper now. Very cumbersome title. I'll change that later. Here's the front page. Gold trading next 6 months. We stick by that, and so far that's what's happening. India needs the gold. Rabo, dear President Biden, by then. Sunday's discussion, while we were doing it, Biden resigned from running again, or who the hell knows? He may have resigned as well. And gold versus silver the next 5 months. That was yesterday's conversation. All right, today, if you think the Democrats, I'm speaking about the competition here and how it affects the market. I don't care about your ideology. If you think the Democrats are going to roll over, you are mistaken. Okay? They are pulling out all the stops to defeat Trump now. And who knows what they may have pulled out at his last speech. Anyway, just a joke. So you attack him socially. They're going to roll out the women's rights, the pro-choice concept, right? Roe v. Wade will become something they rally the women with, right? And on the economic front, they're attacking Project 2025 very aggressively, but on the economic side of it, the side that will start coming out from all the economists that lean left will be this. And it's just starting. Trump will cause a recession. Democratic victory only marginally alters the U.S. economic trajectory. Republican victory blows it off course. A full-scale implementation of the Trump tariffs will increase inflation and put the U.S. in recession. Now, I didn't write this. A bank wrote it. We have that full report for you. I'm not going to mention their name. I'll mention it at the bottom. But it's a bank that I happen to know, leans left. It's a big commercial bank, and they do support more or less woke to the woke side of the policy spectrum. Now, they probably give a lot of money to the Democrats. That's what I'm saying. The impact on the economy, it reads, is as permanent as the tariffs. Output and price levels do not recover. A partial victory where Congress is divided improves economic outcomes relative to full victories. And what is the goal politically of this economic piece? Number one, Trump needs to lose. Number two, if he does win, we at least have to make sure that he doesn't have a sweep and we retain Congress, Senate, et cetera, et cetera. This is very significant because when people had been at the bank level, and myself included, talking about Trump tariffs, we have been talking about them as either inflationary or recessionary. In fact, Michael Hartnett, which we wrote on this weekend, discussed that. He said, tariffs are this is synopsizing what he said. Tariffs are inflationary when they are added in an economy that's on the way up. Okay, so you raise tariffs, people all have jobs. I don't care, I'll just pay more, right? That's the import tax. That's what a tariff is. It's an import tax. However, Hartnett made the point that in an economy that's on the way to recession, people are getting laid off. A tariff makes people not spend. They don't say the future's bright, I'll just buy it. They say I'm worried, and they don't. So a tariff in an economic downswing, Hartnett argues, is more recessionary than inflationary. That's how he phrased it, one way or the other. Now, I know that there's an overlap there, but it's really not an overlap, okay? What it really is, and the worst case scenario for tariffs that cause a recession is stagflation. The best case scenario is tariffs cause increased revenues. Now, I'm going to tell you later on why this is complete bullshit. Not what Hartnett's saying. What Hartnett's saying is right, but the framing of this is complete bullshit because they're looking at fiscal policy. Anyway, I'm going to talk about that later on, but just know that the Democrats will attack him from the left on women's rights, right? They can no longer attack him on him being rude because he's not being rude anymore, right? They're going to attack him on the left from what I just said. They're going to attack him on his age because he's the older guy now, right? And most importantly, or the focus of this, what we do, what Goldfix does, is they're going to attack him economically by saying tariffs create recession. It's wonderful how devious they are. Anyway, they ain't laying down. So there you go. Donald, if you're listening, that's what's coming if you don't know already. All right, moving on to the next thing. China's third plenum provides little support to metals. Okay, China had their third plenum. Let me just read this. Last week's key Communist Party meeting failed to lay out more policies to prop up demand for metals, and we expect copper and other industrial metals to decline further in the near term to reflect softer demand outlook in China. China's third plenum, a twice-decade policy meeting, wrapped up last week, and metal markets have been looking for signs that the government will take action to address the country's prolonged property slump, the biggest driver for industrial metals demand. The slowdown in China's property sector has been a major headwind to copper and other industrial metals demand for over 2 years. Metal markets have been looking for signs that the government will take action during the key meeting of Communist Party officials in Beijing next week to address the country's prolonged property slump, but the lack of short-term stimulus disappointed. We got the short-term stimulus yesterday, by the way. The government released a lengthy document over the weekend providing further details for housing. The government wants to establish a system that promotes renting and purchasing, as well as boosting the construction of affordable housing. In addition, the government will give local governments more power to regulate their property markets. However, without further stimulus measures, there is little hope for a near-term recovery for the property and construction sector. We believe the continued weakness in the sector remains the main downside risk to our outlook for industrial metals. Amid a surge of Chinese exports, global copper inventories have been rising, underscoring a soft spot demand in China and elsewhere. LME copper stockpiles have more than doubled since the middle of May to the highest level since September 21. With most of the buildup seen in warehouses in Asia. On the Shanghai Futures Exchange, stockpiles have also surged this year, and there has been no significant drawdown over the past few months, usually the peak period for copper demand. All right, we have this full report at the bottom, okay? I want to go through this and try and frame this so it makes a little bit more sense. Let's start with this. Chinese real estate is the major reason that industrial metals have been rallying for the last decade and increasingly the last several months. In the last several months, they rallied because we thought China would have a bazooka stimulus package, which they did somewhat. Okay. And that made copper rally, squeeze someone out. It helped silver recover relative to gold and other industrial metals like steel. However, and this is big, China's inventory of copper, they're not buying copper right now. Okay. This is China's exports of copper. They're selling copper now. They're satisfying global demand by exporting their supply. Now, is this a new phenomenon? No, we've discussed this before, and it started about, maybe 3 to 5 months ago when China started shutting down their refiners or smelters. And if that means they're shutting down production to save money, then they're probably going to start exporting inventory. Okay, so that's a problem. What makes it turn? Well, everyone bought copper and other commodities because they thought China's economy would be stimulus. Well, first of all, China's property market doesn't show signs of bottoming out. I won't call it a crisis anymore. It's under control. It's not a crisis. But under construction continues to drop. Okay. Completions has flatlined. Maybe it's dropping, maybe it's not. Starts is starting to recover. So just keep that in mind. We're not seeing a sloping uptick in starts. They have copper to sell. Nice picture. Where's the chart that I really, really want to focus on here? Actually, it's not a chart. It's right here. All right. The government wants to establish a system that promotes renting and purchasing, as well as boosting the construction of affordable housing. In addition, the government will give local governments more power to regulate their property markets. It means they want people to spend money on real estate. So what does that mean? They're subsidizing their economy, but not into supply, not to buy raw materials to build. They're subsidizing their economy to stimulate demand. This is demand stimulus. This is good for stocks. This is good for earnings, potentially. This is good for someone who needs to pay money to rent. Okay, there's a lot about China that we've learned recently, and they are the furthest thing from communist you could ever see now. And now they're going to throw a little bit of socialism back into the mix. That's my opinion. And that money's not going to copper, which brings us to silver. That's why silver sold off with copper. That's also why silver recovered, because silver is copper and it's gold. The key to this whole complex now is gold. I said this yesterday, I'll say it again. The marketplace has a force now selling industrial metals. Silver will get taken up in that force and sold off. It'll also be helped a little bit by bullion banks who need to buy gold. The question is, how inelastic is the gold demand from here on in? Okay? I think it's pretty damn inelastic. Why? Because the BRICS summit is coming, because the election is coming. I don't think that the central banks and the sovereign funds and whoever else is buying for the little private domain there over there in the Far East is backing off. Europe's also buying. I think they're buying. The question is, will they be more patient? They see silver dropping. They say, I'm going to buy it, but I'll lower my bid a little bit. I'm not going to rush. And that's how these things work. You get the gold buyers to back off until they run into a brick wall and they have to buy. So you have a competition between now and, say, November. And that competition is on the gold side. The urgency of time, we need to buy it by this date, versus the discretion on price. Silver's down, I'll take my time. Okay? So As a trader, I'm saying this. I believe that the market dynamics, more or less, you will see a lot, not all the time, but you'll see a lot of this. If silver gets sold, I'm going to pull back my bid in gold and see what happens. If silver starts to rally, buy gold. So if silver's down $1 and gold's unchanged, well, that's what I told you is happening, right? They're still buying, but they're not backing off. And if silver comes off the lows, gold's going to pop. That's kind of what's going on for the last 3 days. I wasn't sure of it until yesterday. So there you have it. This is all tied into the next 3 months, the next 5 months, what's going on in the market. Look, copper is a base metal and it's being sold. EV, the whole electronic green revolution, it's getting a little water thrown on it, right? Right. Silver's going to get dragged into that. And if you're a speculative player in silver, you're saying, well, will they sell silver? Probably not. But you want to look at a couple things. You want to look at, number one, the options positions in gold. I don't see the options position in gold or silver reflecting bullishness right now. I see them reflecting neutralness. And you want to look at the inventories in Shanghai. Are the inventories in Shanghai Vault going up? If they're not, then everything's fine. If they are going up, things may not be good, but they're probably not bad. All right? That's it. Let me close this out here. Where is that? There it is. All right, so we covered a lot today. China's property market crisis. And so on deck today, you got PMI, which is probably going to be watched pretty heavily today, although it'll be ignored because of the political stuff going on. Anyway, Thursday's GDP and Friday is PCE. So big week for data. Surprises potentially are a big deal, but right now everyone's focusing on something else. I'm Vince. Have a great day.
Well, thanks for joining us here today for the Morning Markets and Metals with Vince Lanci, which is brought to you each day by Miles Franklin Precious Metals, who we encourage you to use when you're buying or selling gold or silver. We're proud to be a licensed representative for Miles Franklin, where this week's specials include constitutional half dollars for only $2.50 over spot and 1/10 ounce American Gold Eagles for only $39 over melt. And you can contact us for more information or to place an order by calling 833-326-4653 or emailing arcadia@milesfranklin.com, where we'll be happy to get back to you. And you can also reach me if you have questions that you'd like to discuss, and we'll be happy to get you set with all of your gold and silver needs. So call us at 833-326-4653, and thanks again for watching. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.